Hello, this is Nick Giardina from MCOL, and I would like to welcome our listeners to today's podcast session. We are pleased to have Doug Sherlock, Senior Healthcare Analyst for Sherlock Company, joining us today. Doug is here to give us his quarterly insights into financial markets of health plans.
Thanks, Nick. In this broadcast, we'll review the performance of the managed care industry for the second quarter of 2019 and year-to-date 2019. We'll also discuss sector valuation indicators and operating trends. First, I want to speak to stock prices and valuation. As of August 13th, stock prices for the publicly traded health plans are up by an average of 7.2% since the beginning of the year. This compares to a 15% increase in the broader market measured by the S&P 500. Health plan sector market capitalization increased by only 1.8% year-to-date, since sector stock price increases were skewed towards smaller plans. Stock prices for 5 of the 8 plans gained ground so far, led by Triple S at 48.1%, followed by WellCare at 15.9%, and Molina at 15.3%. Anthem grew by 7.4%, Humana gained 3.1%. By contrast, some of the larger plans actually decreased. Centene fell by 16.8%, Cigna fell by 12.8%, and United by 2.4%. Valuation metrics were mixed since the beginning of the year, with price to trailing 12 months earnings down by 18.6% to 17.2 times, and price to operating earnings increased by 6.8% to 16.4 times. Price to sales fell by 19.9% to 0.58 times. Price per total member increased by 1.2% to $2,700, and price per risk member fell by 21% to $4,300. All rates of change are calculated holding the universe of health plans in both periods constant. Since our last podcast in May, average health plan stock prices are higher by 4.3%, with health plan market capitalization higher by 4.1%. The S&P 500 has gained 1.1% since May. Health plan valuation metrics also trended lower. On to our review of operating trends. For the second quarter of 2019, combined ASO and risk membership increased by an average of 4%, while increasing by 2% in total to 134 million. By average growth, I mean the average of each health plan's growth rate. Total reflects the change in combined membership for the plans as a whole. Fully insured risk membership increased by on average and in total by 6% to 75 million. Medicaid plans experienced average growth of 17% to total growth of 19% to a total of 20 million members. Commercial plans reported an average decline of 1%, but the total growth of 1% to a total of 55 million risk members. Molina reported the largest decline at 17%. WellCare had the largest increase at 40% compared with the second quarter of 2018. This was due to the acquisition of Meridian in September of 2018. The proportion of total members served under self-funded ASO arrangements fell by 0.7 percentage points to 44.8%. On average, the plans posted a 3.2% decrease, but ASO membership was up in total by 0.2% to 60 million. Revenues for all plans increased by an average of 14% and in total by 12% to $141 billion. Medicaid plans reported $30 billion in revenues with an average increase of 22% and a total increase of 25%. WellCare and Centene posted the largest percentage gains in revenues for all plans, higher by 51% and 29% respectively compared to their comparable quarter last year. Commercial plans increased by an average of 10% and in total by 9% to $111 billion. Triple S, which, by the way, has a very large Medicaid business, posted the largest percent increase in revenues. Premium rates for all plans grew by an average of 8%. Medicaid plans and commercial plans experienced an average premium growth of 5% and 10% respectively. Note that the premium rate growth does not adjust for changes in product mix, geographic factors, or benefit design changes within the products offered by these plans. There's reason to believe that Medicare Advantage grew more rapidly than commercial, for instance. Operating earnings for the second quarter of $8.3 billion reflect a total increase of 3% and 17% on average. Medicaid plans reported operating earnings of $1.1 billion, an average increase of 26%, and a total increase of 17%. WellCare's improvement was the strongest, with an increase of 75% to $232 million in that quarter. Commercial plans also gained ground to $7.1 billion in operating earnings, and an average increase of 11%, and a total increase of 1%. Triple S was not included in the percent changes due to its losses in the second quarter of 2018. Average operating margins for all plans increased by 0.3 percentage points to 5.4%. Medicaid plans posted a 0.2 percentage point decline to 4.2%. Commercial plan margins increased by 0.7 percentage points to 6.2%. The health benefit ratio for all plans increased by 1.7 percentage points to 84%. Note that Sherlock Company's calculation of health benefit ratios excludes the impact of favorable and unfavorable prior period reserve development. When they were announced, we remove them from the expenses recognized in the current reporting period and then allocate them to the quarters in which the understated or overstated expenses actually took place. The average health benefit ratio for Medicaid plans increased by 2.2 percentage points to 83.8%. Commercial plans posted a 1.4 percentage point increase in their health benefit ratio to 84.1%. However, the administrative expense ratio fell by 2.4 percentage points to 9.4%. Medicaid plans reported an average decline of 3.2 percentage points to 11.1%, while commercial plans experienced a 2.0 percentage point decline to 8.5%. Non-operating earnings grew by 202% to $1.3 billion. Our calculation of non-operating income is the sum of investment earnings and income earned in non-health lines of business, less interest expense. Medicaid plans reported non-operating gains of $41 million compared to a loss in the prior year's quarter of $11 million. Commercial plans experienced a total increase of $804 million to $1.24 billion. Net earnings for the second quarter were higher for the plans, increasing by an average of 1% and in total by 12% to $7.4 billion. Medicaid plans had net earnings of $848 million, a total increase of 42%, and an average increase of 48%. Commercial plans generated $6.5 billion in net earnings, a total increase of 8%, and an average increase of 12%. I want to close by touching on a key environmental factor. You might recall earlier I mentioned the sharp decline in administrative expense ratios, and that's actually something that we're seeing in universes of private companies as well. Since we last spoke, we published benchmarks for health plans serving approximately 48 million people. 37 million were in Blue Cross Blue Shield plans, and 11 million were in independent provider-sponsored plans. While Blue Cross Blue Shield plan cost trends accelerated to 6.7% increase, the independent provider-sponsored plan cost trends declined to growth of 3.4%. This differed from the 2017 results when the total cost trends were relatively similar at the range of 5.5 to 6%. Growth in all clusters was faster for Blues than for IPS plans. This was especially notable in sales and marketing, which was driven by the marketing function itself, and in account membership administration, which was driven by information systems. Sometimes marketing costs, particularly in the area of product development, track with information systems trends. In September, we will release the new benchmarks for the Medicare and Medicaid universes. Collectively, we expect the Sherlock benchmark is to encompass the results of approximately 40 plans serving well over 50 million people. While participation is no longer possible in this cycle, the results are available for licensing. We can assist you in the harmonization of your expenses to our classifications. No one knows who originally offered the aphorism, manage what you measure, but it nevertheless contains some wisdom. Such measurement implies comparisons with other excellent organizations. The Sherlock benchmarks may be helpful to you in managing the activities that you provide to all of your members, whether they are insured or not. As always, you can get a transcript of these remarks through MCOL or through Sherlock Company. We look forward to hearing from you. This is Doug Sherlock of Sherlock Company.
You have been listening to Doug Sherlock share his quarterly insights into the financial markets of health plans.